Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories behind those dusty corporate filings. Today we're diving into MeiraGTx's Holdings PLC's latest report, and let's just say this one has more twists and turns than a gene therapy delivery system. Alright, so MeiraGTx is a company focused on genetic medicines, aiming to treat serious diseases. Think of it as trying to fix the instruction manual of our cells. Let's jump right into the numbers. Looking at their balance sheet for the 30th of September 2025, we see their cash and cash equivalents took a pretty big hit, dropping from over $103 million at the end of 2024 to just under $15 million. That is a massive decrease and shows they are spending money fast. On the flip side, their total current liabilities jumped significantly to over $152 million from about $60 million at the end of last year. That is a big concern. It means they owe more money in the short term, and with such a low cash balance, it could signal trouble down the road if they can't manage these debts. And then we see their total shareholders' equity is negative at a deficit of over $40 million. This means that if you added up everything the company owns and subtracted everything it owes, it would still be in the red. For a company at this stage, that is not unusual, but combined with the cash situation and rising liabilities, it definitely raises a flag. Now, let's look at their income statement. Their revenue is surprisingly low, just over $400,000 for the 3 months ending September 2025, down from over $10 million in the same period last year. This drop is huge. And look at their cost of service revenue, it fell from almost $12 million to just over $300,000. This drop in both revenue and its related costs likely means they finished a big project or service agreement they had with a related company, probably the one related to that asset purchase agreement we saw mentioned. Their research and development expenses, however, are still high, over $32 million for the 3 months, and nearly $99 million for the 9 months. This is where they are pouring most of their resources, which is expected for a biotech company. Interestingly, they reported a foreign currency loss of over $1.5 million in the latest 3 months, a big change from a gain of over $3.4 million last year. This usually means the US dollar weakened against other currencies they operate in, like the pound or euro, and unfortunately, the net loss is substantial. Over $50 million for the 3 months, and over $129 million for the 9 months. It is a lot of red ink, but it's important to remember this is a company investing heavily in developing new treatments. Now, let's talk about their people. The share-based compensation activity, basically how much they're giving in stock and options to employees, is quite significant, around $16.5 million for the 9 months. This is a common way for startups to attract talent, but these stock awards can also dilute existing shareholders. Looking at their options, there are close to 8 million share options outstanding with an average exercise price of over $12. This is a key area to watch. If the company's stock price goes up, these options could become very valuable, but also lead to significant dilution for those who don't hold them. Okay, so beyond the numbers, there is a big story here. MeiraGTx announced a significant deal with Eli Lilly, a pharmaceutical giant. This partnership gives Lilly rights to MeiraGTx's AAV, IPL-1 program for a serious eye disease. This is huge for MeiraGTx. They're getting $75 million up front and could get over $400 million more if things go well. This deal provides a much needed cash infusion and validates their technology. They also got a big nod from the FDA for their AAV2, HAXP1 treatment, which helps with dry mouth caused by radiation. It received Regenerative Medicine Advanced Therapy designation, which can speed up the review process. Another major deal is the one with Hologen AI. They're getting a significant upfront payment and additional funding, with Hologen AI contributing to the development of their Parkinson's disease treatment. This partnership leverages AI to potentially speed up drug development, which is a very modern approach. They're also seeing positive data from their botaretigene sparaparvovec treatment for an inherited eye disease. Johnson 20-amp. Johnson is involved here, and the feedback seems very encouraging. This is a major potential payday, up to $285 million in milestones if this drug is successful. Now, let's talk about the risks. The company acknowledges they have significant losses and will likely continue to have them. They need more money to keep going, and there is no guarantee they'll get it on good terms. This is a constant tightrope walk for companies in this sector. They also point out that they might not get all the milestone payments they're expecting from Johnson 20-amp. Johnson, this is a crucial uncertainty, as those payments are a big part of their future financial picture. This is the big one, they need cash, and if they can't get it, it could seriously hurt their ability to continue developing their treatments. It is a survival question for many early-stage biotech firms. And for investors, the stock price is expected to be wild. They specifically warn that their share price can go up and down a lot, meaning buying their stock is a risky bet. They are also exploring strategic deals, but they're upfront that these might not pan out and the process itself can be a distraction. Developing gene therapies is super complex and expensive. On top of that, there aren't many approved gene therapies out there, so the path forward is uncertain and may take a long time and a lot of money. So here is my take on MeiraGTx. They're in a high risk, high reward industry. The deals with Lilly and Hologen AI are massive validations and provide much needed financial breathing room. They're making progress on key treatments, especially for eye diseases and Parkinson's. However, the company is burning through cash rapidly, and their debt situation is a serious concern. Investors need to be aware that this is still a very speculative investment. Success hinges on getting these groundbreaking treatments approved and generating substantial revenue, which is a massive hurdle. The good news is they have strong partnerships now that could help them navigate that. The bad news is the road ahead is undoubtedly still filled with financial and regulatory challenges. What is your take on MeiraGTx's path forward? Are these deals enough to secure their future, or are the financial risks too great? Let me know what you think in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more deep dives into the world of corporate finance. And don't forget to join our Discord community linked in the description below for more discussions. Thanks for watching, and we'll decode another company story soon.